Hello, everybody, and welcome to the MakerDAO Scientific Governance and Risk Meeting, number 125, taking place on Thursday, January the 21st of 2021 at 1700 UTC. My name is Long for Wisdom. I'm the Governance Facilitator at MakerDAO. I host these meetings. And yeah, we've got an agenda today, as usual. We'll go through some general updates from a number of people. Maybe we've got a segment later regarding risk value, calculating value at risk, I believe, if I'm correct. So yeah, general kind of reminders. Feel free to interrupt people as they're talking, and we want to hear from you. Please don't be shy. And yeah, let's just dive in. I'll start with governance. So let's see, last week, or this week, sorry, we had a out of schedule executive on Monday to increase the ETH and WBTC debt ceilings as we were close to reaching the ceiling on both of those. We did in fact reach the ceiling on ETH. So that has now passed. So there is once again space to create DAI using ETH on ETH. Let's see. So we also had a number of polls last week as well. I believe they all ended successfully. The ones that did end, obviously the green light polls are still ongoing. So we should see a lot of those changes being included in the executive tomorrow. It's a fairly full executive tomorrow anyway. It's going to be including the, let me see if I get this right, the ETH WBTC, Uni LP vault, and the USDC ETH Uni LP vault, along with a bunch of other changes. So yeah, look out for that tomorrow. In terms of governance domain generally, I don't think I have any substantial updates from last week. Continuing to onboard new contributors, which seems to be going well. And yeah, I'll give you a more substantial update next week or the week after. Okay, so with that, let's maybe move on to governance at a glance. Pros, you good to give us an overview of the forum and things?
Yeah, absolutely. So pretty exciting week. As a MKR holder, one thing to note is the surplus buffer has officially been increased. So we got a little less than 6 million DAI left before that gets filled back up, and then our typical buy and burn operations resume. One really exciting part of the rates increase is we kind of peaked at an all-time high in terms of stability fees generated per second. For those that don't know about it, makerburn.com is a great way to kind of check out what's happening there. And they even got a live update on how much is going to system surplus. And if you click on stability fee zone, you can see about how much our growth rate per second is in stability fees. Right now, that's about $1.10 or 1.1 DAI per second, which is pretty exciting. The volume weighted average price for DAI is still super strong, sitting at 1.001. So you love to see it. Been a pretty active week in the forum as well. A couple of polls I wanted to point out were brought to us by the Real World Assets team. They're both looking at how they describe their onboarding in terms of risk selections, what they bring to the community, and kind of what we want to see more of to better understand how they're evaluating the products that they're bringing to the forum. And they're also looking into using longer term structures for the loans that they're attempting to bring back with the real world assets. So a couple of pairs of polls there you should check out and definitely vote. Probably the biggest drop, at least in a while, for the forum is the road to the DAO, the core unit operating model brought to us by Juan. And I believe he's going to speak to that a little further today, so I won't dive too much into it other than to say that it looks a little intimidating as a MIP set, but it's really well packaged and kind of lays out the groundwork for how we can move to paying our own teams and operating entirely separate of the foundation. The other forum interaction kind of wanted to point out was that Incognito has brought anonymous DAI transactions. So that's a pretty neat feature. Then they asked for some feedback as well in terms of how we see that maybe being used with Maker. So check out that on the forums. Pretty light week in terms of signaling, probably thanks to all the other signals that expired this week or a few days before. But we do still have an active one going that is new from the last time we gave an update. And that is for an ETH vault with a higher liquidation ratio. This came about as a discussion with the risk team in terms of how we could safely increase exposure to the Ethereum asset. So go ahead and give your opinion on that. That pretty much does it for governance at a glance.
Great. Thank you, Bruce. Anyone any questions or comments before we move on? Okay, doesn't look like it. So yeah, let's go to smart contracts then. Chris, you want to give us an update?
Sure. So much like last week, every possible minute of our day is packed. So I don't have my usual list of things to rattle off, but I'll mention that we are sort of deeply engaged with auditors right now. There's a number of changes that we have to make to liquidations 2.0, and we've been working on that. The entire team has dropped everything and canceled as much stuff as we can, and so we're pretty heads down on liquidations 2.0, which is a perfect week for this to happen because the community exec is happening this week. And then tangentially related to that, the one thing that got bumped for the liquidations 2.0 work was the MIP 21 work. And while we've been working on liquidations 2.0, Lev's made a number of changes to the MIP 21 stuff, some stuff we asked for. And we had pushed back last week, I think, because we wanted unit tests, and that was maybe a good thing. Lev ended up finding a bug that none of us had seen just in the manual review. So the unit test caught one bug there. So we're going to end up reviewing that. I actually think Lucas and team from MIP 22 are trying to do some of the review because they're behind MIP 21, so they're taking a look now as well. And so I kind of wanted to talk a little bit about just the general timeline. So we're pretty heavily working on liquidations 2.0, and that's our high priority interrupt. So whenever we get feedback from the auditors, we're going to end up having to drop anything we're doing and focusing on that. But we're expecting to have most of that code pretty finished for, I think, Monday of next week, or Friday of this week to Monday of next week. So they're going to go at it at that point, at which point we will flip our focus back over to MIP 21 and getting MIP 21 in Kovan and possibly even mainnet for next week. And then as soon as that is finished, we'll flip gears over to MIP 22. So which needs to go through a bunch of the code is written for that, but we need to do the sort of full review process. So that's our kind of timeline right now, and then obviously wherever other LP collaterals and whatnot fit in. I do want to hand off to Sam though, because this week is the community executive, as many people know. And Sam's got a bunch of stuff that he's been working on in there, and I think he and Will have been working on that. So maybe Sam, you could give us an idea of what is going in this week.
Sure. So yeah, as Chris said, Will and I are taking care of the executive this week. So there's quite a bit going into that. We have two new Uni LP types, WPTC F and USDC F. We have a bunch of debt ceiling adjustments to Link, Mana, BAT, TUSD, and the PSM, which will additionally get a LERP module, which will increase the debt ceiling slowly to the target 500 million over the next 12 weeks. We're also going to increase the dust to 2,000, do the vault compensation payouts, and whitelist Instadap on FUSD. So yeah, that's it for the community executive.
Full compensation working group payouts, just to be exceptionally clear about what that is.
Did I not say that?
You said compensation payouts, which could be misconstrued. So I want to make,
Yes, vault
sure that's not-
compensation payouts.
Yeah, vault compensation working group payouts. Yep, there we go. Okay. All right. Does that cover smart contracts, Chris and Sam?
Yep, that's it from us.
Cool. All right. Let's move on to oracles then. Nick, do you want to give us a brief update?
Yeah, sure. So we yesterday we deployed the new LP oracles for the 2 LP tokens that are going live tomorrow. So that's wrapped BTC ETH and USDC ETH. On the audit front, so we finally did talk to the auditor that Lev had connected us with, ABDK. Kind of scoped them out a bit. They seem to be pretty legit. So they had forwarded us an audit that they did for Tornado Cash. So after looking through that, it looked pretty thorough. So the timetable they gave us is that they should be able to do it kind of beginning of February and then finish by February 15th. So that timetable looks very nice from my opinion. So even if it's a bit optimistic, at the very latest end of February, we should have this audit back. So turnaround time on that is going to be fairly quick. So after we incorporate those changes, we should be able to increase the debt ceilings relatively quickly. So given that kind of short interval between now and then, I think the priority for collateral onboarding, apart from the real world assets from Centrifuge and Success, should be to kind of just onboard LP tokens en masse. Because right when we get the audit results back, we can just crank up the debt ceilings and we're off to the races. Let's see. So speaking of real world assets, the Oracle assessment for Centrifuge is going to go live later today. Excuse me. So that should be included in a polling vote, I think by Monday. Correct me if I'm wrong. Long for wisdom.
No, that's correct.
Yep. So that's things are moving forward on that end. So that's good. On the Starkware front, development is pretty much done. So we're going to be a couple things. Well, one, we're going to be putting it into testing in our staging environment. And 2, Mark Andre has compiled the MIP 10 for that, so that should be going live before the end of this week as well. So maybe that's kind of a big one. So maybe not polling vote on that this Monday or this coming Monday, but probably the following Monday to give the community a chance to review it. For some context, there are 17 total oracles in that proposal. So if anyone wants to take a look at, what sources are being used and kind of give some feedback on, whether they think, the data models chosen are good or not, that would be really appreciated, especially given the, sheer magnitude of oracles that will be onboarding. And then lastly, I think Chris Mooney brought this up earlier, or actually maybe it was Sam. We're going to be adding Instadap to the whitelist of the ETHUSD Oracle, so they can start doing some of the stuff that people like DeFi Saver are doing, right? Where they can save you from liquidation or kind of manage your position. And a little bit of foreshadowing in this direction. So I think in terms of whitelisting, the kind of governance overhead, in terms of the quantity that has been coming through lately, and the time it takes me and the rest of the Oracle domain team to write up the polling votes and stuff. I was going to propose a MIP that adding someone to the whitelist probably shouldn't need a governance proposal, right? The only thing that there's really not any reason we would ever reject someone, right? And it's really just more money for the DAO once we end up turning on the Oracle fees. The only thing that really needs to be checked, right, is that the smart contract that's reading the Oracle value is kind of closed out, right? That it's like private, so no one can just kind of steal the Oracle value from there. They do have to come to us to get the value. And the Oracle domain team already does those evaluations anyway. So we've also never had a polling vote rejected for whitelisting someone. So I'll put that MIP proposal for before the community, and let's have a discussion about it. But I'm thinking that the Oracle domain team should just have the authority to be able to add people to the whitelist, kind of like on the fly. Important to note is the Oracle domain team should not get the authority to remove anyone from the whitelist, right? Because that would give them right leverage to disrupt protocols that are using the Oracle. So that would not be good, right? So governance would need to step in were we to ever want to remove anyone.
One quick question on that, with regard to ETH. I mean, maybe there's a scenario where we want as a community to consider giving ETH as a collateral, or just the pricing of ETH kind of for free, and not having a gate in or out, and just everything else maybe as a business model. But ETH, given the depth of how many people use it as an ecosystem, I think it'll actually help focus the efforts of MakerDAO being the source of pricing of ETH into the network.
Yeah, I think I've actually thought of that before, but yeah, I think it's a good idea. We should talk about it a little bit more in the forum. See what the rest of the community thinks.
Just to quickly add to that, I had Yield Protocol, Alan from Yield Protocol, come on the community call on Tuesday, and one of the questions we talked about was exactly how they rely on our oracles without being whitelisted, and he basically described a bit of a workaround way that they're reading the price feed. So having something like a free ETH feed for projects that are still in super early stage is a great way to cement a future customer, because I imagine Yield Protocol will expand beyond doing fixed rate products for just ETH, right? They intend to support a bunch of other stuff that have a bunch of other assets that have maker vaults. So yeah.
Okay, does that cover your updates, Nick?
Yep.
Awesome. All right. So that covers oracles. That brings us to risk. Pirish, do you want to start off?
Yes. So yesterday we published a risk evaluation on a farmable CUSDC crop join adapter, which is MIP 30. We also proposed parameters for this vault type. I suggest you read the risk assessment, since this kind of vault type is a bit more complicated. It has a bit of an unusual risk profile compared to all other vaults we onboarded so far. We do think that this kind of vault will be very popular, probably utilized heavily from the early start, because the yields that could be achieved here by leveraging this kind of vault could measure well over 100 APY. And this is actually after 7% stability fee that could be collected by Maker. also this adapter could be very useful, right, for any other LP tokens that have liquidity rewards. So I think this is important because Maker can position itself quite uniquely here. We also started evaluating the next batch of Uni LP tokens, for which we already know there's a high demand. So in the upcoming days, we'll be evaluating USDT ETH Uni LP pair. This one was already greenlit recently, and potentially also DAI USDC Uni LP pair. But this one is still pending. So if it gets greenlit, we'll work on it. It also looks like the on-chain poll for the Epsilon instant access module implementation for other vault types passed today. So we'll need to propose parameters for each vault type in order to have this implemented. We're probably going to roll them out in few batches each week, or maybe even all at once. It really depends if we can find some easy common formula to determine all these parameters needed for each vault type if you want to have this implemented. I think I mentioned this, that we don't believe that we should implement this module for stablecoin vaults or PSM, because this might limit DAI supply when it's needed mostly, right, in some liquidity crunch events. And this is something we may want to avoid. So we'll probably not propose including instant access module for something like PSM. I think it even doesn't make sense if you're using CLERP module anyway. I also mentioned last week, we started preparing a budget for risk team. The risk team now consists quite a decent amount of people. I think it's already like 6, maybe even 8 if we count part-time who are working on collateral evaluations. But we first need to properly read this new MIP proposal that I think Juan will talk about, so the core units one, to understand how exactly this is meant, so we can propose budgets aligned with this. And then finally, Andy has, so Andy's new on our team. He's prepared something on value at risk calculations of Maker portfolio. And he should give a presentation at the end of this call today. So stay tuned for that. And that's pretty much it for past week from our side.
Cool. Hey, Primož, I want to circle back to the crop join collateral risk evaluation that you put out yesterday. You mentioned in that piece that compounds governance might change the speed of the comp rewards that are distributed to particular markets. In this case, it would be CUSDC. And you said that it creates a problem for Maker's governance. Do you think that the Maker community should have a team of quote unquote ambassadors that communicate with compound governance and try to work on building a strategy that is beneficial to both protocols? And same thing goes with keepers, right? I was reading, I forgot what post it was, but it's something to do with keepers. Oh yeah, worried about the 15 million DAI box being enough. And you mentioned there, and Greg D brought it up about keepers not having enough liquidity. And you wrote that somehow you feel that keepers have more capital these days than 4 months ago. Do you still feel that way? And do you think we should also have ambassadors like Greg D to keep in touch with these keepers and other people from the community to make sure that these keepers have enough liquidity? It's a big question. I'm sorry about that. But
no problem. So in regards to compound, this speed change, this is already effective, right? So this is not really an issue. The yield on USDC is still fine. But what I wrote about in the risk assessment is that there are other upcoming governance changes that are being proposed or are going to be potentially proposed, and we need to keep an eye on it. So one of them is, I think there's going to be a cooldown period for comps claimed. So this is something we need to keep an eye on. If they implement it, this might affect the adapter, but probably Lev should know better. And there could be other things as well. So definitely we'll need to keep an eye on their governance and need to react as soon as possible. They also have a similar procedure. So before something gets implemented, they discuss it on forums. There's an active signal, I think, and then before it gets executed, I think it's 2 days. And I think Monet Supply, who's on our team, is quite active there. So he knows what's going on. So this is always good. So yeah, that's the thing about compound. And then about keepers, yeah. So we know that the maker's risk is struggling a bit, and I've talked about mitigating risk. We'll talk about it actually at the end of the call as well. But yeah, one of the things that's kind of limiting currently is 15 million bucks. And of course, we would primarily want to increase it if we were confident enough that keepers have enough capital. My speculation was that, yeah, perhaps the keepers ecosystem evolved in the past 6 months, and they should have more capital on their hands. But this is only speculation. I can't really, we don't have any evidence. We've tried evaluating on-chain reserves of keepers, but it's kind of hard because many of them, they actually mint DAI when needed, right? They don't necessarily hold it, they mint it, or they already minted it. So it's hard to just simply look at their wallets and say, this is the amount of money. So the last decision we made on 15 million bucks was, yeah, more or less based on the feedback we got from keepers, right? And it sounded a bit small, but this was still good, right? Because if they would say a high number, it could, this could be, we couldn't be really confident. This would be a problem. Like if they say a small number, it's always great because we know, for them, high number is actually beneficial if they're hostile. But currently it's really hard. Like if Greg's here, if he wants to commentate, but otherwise I feel like we need a proper way to communicate with keepers, right? To get some kind of feedback, and we're still missing that.
Yeah, I can jump in really quick. So the problem we have is that it's very cumbersome infrastructure to run right now. And there's very little incentive to run it because there's just not that many auctions. You're waiting for a one-off event that may happen twice a year. And as a desk deploying capital, they don't want to do that. And the other issue is that a lot of them have compliance departments that have to approve all these things. And if this infrastructure is made redundant by Liquidations 2.0, which it seems like it will be, then they don't want to put in the effort to go to their compliance departments and get a whole setup approved and put in all these resources for something that's going to be redundant in a few months. So yeah, I mean, it's just with the current infrastructure, if we didn't have Liquidations 2.0, then I would recommend that we take a bigger initiative to go out and ensure that there's keepers. But because we do, it's almost pointless to do that because you're really just going to be doing a big initiative for a few months.
Got it. And switching gears real quickly, Primož, not to put you on the spot again, but I've been hearing a lot of these old school billionaires talking about that there's a euphoria right now in the financial markets, traditional markets, et cetera. So how do you sleep at night? Do you think that the first wall that Market Relayer has, Tim Black has put out the Market Relay letter this week, and it shows that there's about 35 million DAI to be liquidated at 1071 ETH. I mean, what's your feeling on that? Like, do you think we'll be able to handle that liquidation if these whales don't cover, and they might be covering today, they might be paying back, I'm sorry, in time?
Well, the good part is that overall the collateralization ratios are much higher than they were in the past, right? So it's the portfolio looks more healthier than it was ever before, actually. But if you look at the nominal exposures, they're still big. So this is a worry. That's why, the last few weeks I've been kind of, shouting a bit, we may need to change some things. We may need to think about high liquidation ratio vaults. Yeah, this was exactly the point of the presentation towards the end of call. So yeah, I am a bit worried. On the other hand, I can see that, vault users are a bit more sophisticated. You could see every time price falls, you could see people unwind in time. There's more automated unwinding going on. ETB though looks a bit worse, right? If you just look at auctions today, currently they're running, they just started kicking off, so maybe that's not the best insight what's going to be the end realization, but yeah, it's not like perfect, right? We may need to do something, and we'll discuss it at the end.
Sounds good, man. Thank you.
All right. Let's maybe move on then for the time being. And as Prima said, we'll come back to the presentation on value risk later on. Seb, do you want to give us an update on real-world assets, given that you are shortly to be ratified?
Yeah, sure. So we are working a lot still on the legal documents provided by Centrifuge to see if everything will work as smoothly as expected. Currently, we don't have a lot of issues. There will be a post in the following days. And we hope that there will be at some point a legal team at Maker as well to provide another view and more insight. We are also working on figuring out how to make a long-term investment. So that was the meaning of the pool on the forum. Because we have a lot of prospects, a lot of people want to borrow money from Maker. Some are very good, not only crazy projects, but at the time being, it's always difficult to put those propositions inside the current structure. And so that's why I'm turning to the community to see if long-term lending is an option or not. And obviously, every time there is someone wanting to borrow from us, I told them that it's either MIP 21 or MIP 22. So the trust model are going through Centrifuge because we don't want to increase the load on the smart contract and Oracle team. So we will continue to use a tool we have at our dispositions. And that's about it. If you have any question, please do.
Okay. Thanks, Seb.
If the call is going to be as short as last week's, I just wrote in the chat as well, then I think, yeah, it would be super curious to have a bit of a discussion around interest rates and like long-term versus short-term borrowing. Yeah, I would love to hear what the community says. I mean, I'm obviously like share a lot of the experiences that you as well just mentioned, Seb, with demand for longer term assets and different kinds of interest rates, and sort of as Maker, like how do we deal with that? How do you compare to traditional banks and funders? But maybe that's towards the end of the call, or I don't know what the agenda is like.
Yeah, we can definitely come back to it if we've got time. As I said, we got that presentation later from Riss, but I don't know how much debate that's going to trigger, so we'll see. But we can definitely come back to it in the future call, right? It's, as you say, it's an interesting topic. All right, let's move on to community development and operational support. Amy?
Yeah, hey. So one thing that it was posted like right before the holidays, so I would just want to remind people there is a beta program for it's a limited duration beta program that the data services, which is an internal team in the foundation, dropped. So the API will be you'll be able to receive historical data on MCD vaults, and it's one piece of a whole suite of products that are coming. So if you want to participate, the details are in the forum post that I just want to throw in there. The second thing is it's been quite exciting seeing kind of a lot of the community take over just a lot of the developments that are happening. So moving forward, actually, we're having Anna who's coming on to cover the community development side of the calls. And so starting next week, she'll be kind of giving those updates. And then we do want to consolidate some time so that all the mandated actors get to discuss and cover. And at one point, we're going to have too many facilitators. So Juan and I are going to consolidate our operational support, and we'll just go back and forth in announcements every other week. So keep it short.
Okay, cool. Yeah, thank you, Amy. Any questions or comments on that? All right, let's continue moving forwards. Cool. So we've got Juan, if you want to do an update on community calls. Oh, sorry, collateral calls. Yeah, I think you can, if you've got a short presentation regarding the MIPs, you can probably do that now as well, if you'd like to.
Sorry. Yeah, I actually do. So one thing that I wanted to comment on, I don't know if Pros commented on already. I think he didn't, but the PSM UI is out, a community-driven, development. So I think it's worth mentioning. We're pretty happy with the end result. So if you haven't seen it, check it out. It's deployed on IPFS. So really excited about that. Regarding the community calls, yesterday we had a call with Harvard Trade Credit on real world assets. Quite interesting. The video is already on YouTube, so if you want to check it out, it's there. Notes coming soon, and next week we will have Lido, which is I'm probably not doing justice to the project, but they're bringing ETH2 staked back to ETH1, for better or worse, Chris. So that's on that front. I don't know if you want me to show a brief presentation that I prepared about the core unit operating model, or we can do it at the end of the call. Up to you guys.
I think it's 5-10 minutes, so you can probably fit it in now.
Okay, can I share my screen, please?
Yes, 1 second. Should be good.
Yes. So let me know when you can see it, and maybe you can do it full screen. Is it good?
Yep.
Okay. So yeah, before starting a very brief presentation, we will have a specific call being hosted by Pros on Monday. So know your MIP number 3, I guess. We're at the cadence of 1 per month, so I guess it's good and good timing. But yeah, a lot of people helped doing this, so by no means it's my own work. So thanks to everyone that helped, and also everyone that provided feedback on the forum. So to give a little bit of context, yeah, the foundation is solving, might have heard the news hopefully by now, and also because of regulatory measures, it's not being able to meet all the government. Example, I don't know if my connection is breaking up. It's the temporary measures. Yeah, some asking for a budget is the perfect example of this. Now Primož again, as he mentioned it, same thing with Seb. And the other thing is the growing complexity, right? So there are new teams that are showing up. So we want to approach this as a framework. So again, why the core unit? The core unit operating model is the first step. So it's a phased approach, and the idea is to have DAO primitives, and they are designed to be easy to transition to, capable of accommodating the current structures with minimal changes. I think that's important. So people were asking about domain teams and current MIPs. So the idea is that these things continue to work with or under this new framework, and we don't change everything that we can receive the newly delegated operations from the foundation, right? So anything that they won't be able to do anymore, we want to be able to do it. And the important part is that we want a coherent framework and not just governance voting on things that are hard to understand and keep track of. So yeah, as I was mentioning, a phase-based approach. So what we're focusing on right now is the initial approach with this MIP set, adding the temporary measures that we've seen, and hopefully in the future we can reiterate with more MIPs and MIP sets and seeing if there's any need in the future. But yeah, the plan of this this MIP set was flexibility and modularity. So why the flexibility and how does it work? So potentially the DAO or governance or the token holders have revenues and they want services in exchange, right? They want to maintain and grow the protocol. So the core unit is the minimum unit to do this, right? So the DAO can provide the recurring cash flows and expect the services in exchange. Everything is clear and listed in a MIP. And then, yeah, a core unit is very simple and very, very flexible. So a core unit has a name and a mandate. That's it. Then there's one or many facilitators with their name and their commitment. This is something that was changed based on the feedback that we received from people. It used to be one, but now we think that it's better to have many or one or many per core unit. And the other thing is a budget, right? So it's governance saying, okay, you have this budget, this is the implementation, and the breakdown is a little bit the rationale behind it. And then the facilitator with this budget, they will be able to hire contributors to become a company and hire employees to form a DAO or LAO, split into several core units, bring in another facilitator to help. So it's quite flexible in that sense, and that's a little bit what we're looking for. Moving to the next slide, and as an example of a core unit, and any resemblance with reality is pure coincidence. But yeah, let's imagine this core unit called oracles. The mandate is quite complex because they're covering a lot of tasks. The facilitator is Nick. He would like put his commitment and information, and governance trusts him, so they accept him. That's the budget that governance thinks it's fair. So it's agreed, and then he kind of does a breakdown saying, well, this is what devs cost in the industry, etc. So we want to keep it very, very simple, and then yeah, Nick would be able to hire either contributors or a company if he needs an audit, for example, or if he wants, he can organize in a DAO or LAO. And then yeah, there are different questions like can Nick form 2 core units? Potentially yes. Can a domain team split into 2 core units to specialize? Also yes. So we want to keep it flexible, right? We think that the current structure of having domains is not enough for everything that we want to achieve in the next year, and this is a good first step. I'm almost done, guys. Sorry. Modular approach, and what do we mean with this? It means that we want it to be compatible with current MIPs and also future MIPs. So, for example, in the budget, you can see that someone could do a manual SAC, or we can implement a keg. So, no pressure on that one. We have the MIP 42 that was, I think, published for RFC this morning. So that's potentially something else that could work with this budget, or any other implementation that we can think of in the future, right? So pretty much the budget, and it could be several budgets. So one could be for, I don't know, salaries, and the other one could be a bonus, for example. But a core unit could have one or multiple budgets assigned to it with different rules and different implementations. So that's a little bit the plan. Same thing with facilitators. If someone wants to come up with a multi-sig MIP or powers, or something like that, or for example, in the core unit, something to do with reporting or accounting. I think that Seb was touching on that as well. All of this would be compatible with this first step, right? So that's a little bit what we were aiming for. So next steps for the community. We're going to do a Q&A Know Your MIP call on Monday, January 25th. So this coming Monday at 8 p.m. UTC. So join us. Pros will post the agenda soon. Then we have also created a core unit operating model onboarding Rocket Chat channel. I know that it's not the best name, but well, at least it's descriptive. So ideally, anyone that wants to fill in a sub-proposal or has any question can get help there, and we can all help each other. And yeah, taking a little bit on the operating support role there, right? And then the next one is that we are in touch with different people to get help. So legal help, for example, if someone needs to form a company, and then potentially paying those people that are helping us to do that as well. So that's a bit on the pipeline. Regarding this MIP set, I need to incorporate all the feedback. So again, thanks for all the feedback that I've received. The second one, I'm aiming for republishing next week. The big change, as I mentioned, that's happening is multiple facilitators per core unit, or the possibility of multiple, it could be one. But the rest is almost cosmetic, right? So it's making sure that it's clearer, because Long for Wisdom wasn't particularly happy with my writing. And the last one,
I was happy. I just like to look for improvements. That's all.
Feedback means Long is happy. That's good.
No, I'm half kidding, but yeah, potentially we can get this out, submitting it and voting. So call your whale friend for support. I'm looking at you, Planet X. And yeah, thanks again for everything. I don't know if there are any questions, if we have time for questions, or you can join us on Monday. There's also a really good video that Mio did and posted in the forum, where he goes more in details about different possibilities. So that's also helpful. So yeah, any questions?
Yeah, I think maybe we'll leave like sort of significant questions till the other call, just to keep things on track for this meeting.
Sounds great.
If that's all right.
Thank you, everyone.
I would encourage everyone to read those over, either now or after Juan's done some updates, because yeah, it's a pretty major step in the DAO's development, and it's great to see. Yes, a good job to everyone who was involved. I know it was not just Juan. All right, that me brings us to MIPS then, I think. David, I believe you're doing the MIPS update this week.
Yes, sir, it is me. Can you give me
yes,
screen share permission real quick?
Here you go. Should be good.
Putting it up now, just uno segundo. Oh, okay, that's how you do it. There it is. All right, no matter how many times I screen share, I somehow always manage to not know how to do it. Happy Thursday, everybody. Today we are going to be going over the weekly MIPS update, as we usually do on this call. My name is David Utrobin. I am a community development lead at the foundation and resident MIP editor in training. Actually, yeah, so let me, no, not share. Jeez, my brain, man. Today's the day, huh? All right, cool. So let's go for it. I created a little like slide for a visualization, because I feel that visualizations often help people kind of place themselves and understand things a little bit better. So we are here. Today's January 21st. So the governance poll actually just ended. So we're coming up to the end of week 3 in our January governance cycle. And next week on Monday, we're going to have a bundled executive vote. So yeah, let's go through it. So there's a number of proposals moving ahead that are part of this. Also, I can't see the comments, so feel free to shout out anything long that I should pay attention to. So yeah, so there's a number of proposals moving ahead with the January governance cycle. Long is actually going to confirm them later on in this call. But we have the peg stability module, which actually has already been implemented. This technical MIP being passed is really kind of a formality. MIP 30 farmable CUSDC adapter is currently there. And also a declaration of intent for the governance communications team. Some more proposals, there's 6 in total. There's also a sub-proposal for operational support domain facilitator onboarding. This actually onboards our very own Juan as operational support domain facilitator. Likewise, we have a domain team onboarding MIP as well, which onboards Sebastian Derivo as a risk team domain facilitator. And then the last domain team onboarding MIP that's in this month's cycle is for smart contracts, which onboards Sam McPherson as the smart contracts team domain facilitator. And so this is really cool because none of these people are like ex-Foundation employees. So it's really amazing to see more and more community members being drafted into these mandated actor roles. That's it for the proposals that are moving ahead in the current cycle. Here are some proposals that are in RFC. We have MIP 26, the governance contract redesign. We have MIP 32, the PEG stability module for compound mixed exposure. This takes the PSM idea and applies the concept of farming comp and some yield with the USDC that's just sitting in the PSM. Creating some revenue for Maker for the protocol. MIP 33 is the Maker Stability Price Module. This is a proposal that allows governance to defend a given MKR price by allocating DAI to buy it out of the surplus buffer. Basically, it like throttles the idea of like the buy and burn at a steady rate. Instead, it's like, yeah, it's an interesting idea. Definitely request for comment there. MIP 34 as well. We have the KEG streaming payments module. This is the evolution of the Flapper distributor. It basically allows streaming of DAI into specified addresses out of the surplus buffer. So this is going to be really cool as we start establishing things like strategic reserve funds, maybe overhead operating budget like reserves and other interesting things like that. A few more additional proposals in RFC, MIP 35, the PEG stability module, which is the compound mixed exposure one again, except this one is with farming. So the other one just collects the yield for lending out the USDC, while this one does that and also the comp farming. MIP 36 is the PEG stability compound governance DAI leverage. This is also part of that same project. MIP 42 is for the proposed compensation addendum for MakerDAO contributors. This MIP is actually really cool. It proposes to pay contributors partially in time-locked MKR and proposes this idea of like V MKR similar to VCRV. And so, yeah, definitely throw some comments in there. And just a note on that MIP, it is a bit early since there are a number of things in the air. For example, like the KEG, for example, like the governance contract redesign. So there's a lot of dependencies there, but the idea is really great to have formally in RFC. Also, sub-proposal, there's I believe, this isn't, yeah, this is a declaration of intent. It's onboarding a new collateral type backed by B protocol. Also interesting indeed. B protocol is a protocol that actually aids, it like creates almost like a liquidation DAO type of construct, and helps Maker take care of liquidations essentially by letting users migrate their vaults there and then giving them first priority for liquidations. So yeah, it would be interesting to see what a new collateral type backed by them would look like. Only a couple of MIPs in conception at the moment. We have MIP 31, the active reserve AMM. This is a technical proposal. It basically makes a case for having a MKR DAI reserve that also acts as a AMM within the Maker protocol. And then MIP 37, which is the static reserve for governance, which is like the most basic version of a reserve that we can have, which can just receive any tokens and can send any tokens as governance would vote to do so if they wanted to. So yeah, really cool ideas. Definitely jump in. And just a note on what the difference between conception and RFC is for MIPs. Whenever a MIP is initially posted, it's in conception. But after MIP editors reach out to the author to fix just basic formatting and kind of making sure nothing's going too crazy there, it gets moved to RFC. And also with being moved to RFC, there's a pull request that's submitted to the MIPS repo. A number of pre-MIP discussions continuing to go on in the forum. thoughts on allowing MKR DeFi liquidity providers to vote and how that would be technically possible, if it's even worth it to prioritize something like that. The throttled surplus buffer idea, the delegation of authority idea, the real estate tokenization protocol idea, and a brainstorm on how we ensure small vaults have a place of maker. And so, yeah. All right, and then lastly, just some collateral onboarding updates as they relate to the MIPs. I believe we are waiting on an executive for 3 of them. I actually would love some confirmation from whoever's putting together the community executive that's going up tomorrow. I'm wondering if success is a part of that. I know I have it on pretty good authority that USDC ETH and WBTC ETH Uni LP tokens are going in. But if somebody can quickly comment on that, I would really appreciate it.
Yeah, so success probably won't make it in on Friday. Not probably, it won't make it in on Friday, but we're likely to get it to Covan on Friday or next Monday. So
very, very cool. I'm then just gonna move that down here for now. That's very awesome to hear. Thanks for the update. And then likewise, if anybody watching or listening would like the status of any given collateral and would like to see like the total list and everything, the collateral status index Excel sheet is actively updated by a number of people that are involved in collateral onboarding at MakerDAO, and that sheet has everything. It links to all the collateral applications, the assessments that have been done, and assigns like the current status of every single collateral application. So definitely use that as a resource. Collateral onboarding updates continued. There were a number of community greenlight polls for this month that I believe are actually still active. So definitely vote on those. I'm not going to read through all of them here for the sake of time. And I did not change this last slide, so you guys will just have to hear it from me again. Happy 2021. Yeah, cool. And feel free to drop any questions if you'd like. And that's me. Thank you.
All right. Yeah, thank you, David. Happy New Year once again as well. Cool. Right. Anyone, any MIPS questions quickly before we move on?
I don't have a question, but thank you, David, and Happy New Year to you. I missed last week's call because I got distracted. I mean, I was on, but I wasn't paying attention. And real quickly, I just wanted to say that I didn't know that Charles had left, but then I found out that he's still with us. So I just want to say, Charles, thank you so much for the work you've done in the past. And, you know, I learned a lot from you. You helped me when I didn't understand a certain MIP or even something so basic. So thank you for the time you spent working for the foundation. And I can't wait for you to start your own core unit and continue to be a part of the community. Yep, that's pretty much it.
Oh, thanks, Frank. That means a lot. Excited for 2021.
Likewise, likewise.
All right. Okay, I think that brings us at last to the risk presentation. Primož, did you want to do a brief intro into what this is?
Yeah, so many of you for around for a year or so perhaps remember when we had a demonstration on general risk model that we used and we're still using for calculating risk premiums. I think we had one presentation already in April last year, and then I had one in October on risk premiums on ETH Vault. And Andy, who's actually new to our team, has been kind enough and he improved the model. He added correlation metrics, and this helps us to measure valued risk on a portfolio level. And this is important metric because Maker's risk exposure has been growing kind of exponentially in the last few weeks. And because we also did add quite a lot of new collaterals in past months. And then finally, we also, we know that we increased the current surplus buffer because it was insufficient. So this kind of presentation should give us some kind of insight, you know, about how well protected Maker truly is. And I also think the presentation should serve governance, not just to understand risk profile, but also soon start thinking about, you know, risk mitigation decisions. Because the debt exposure can continue to grow. and we may want to react sooner rather than later. So I'll let actually Andy present his work, and then we'll have some discussion at the end of his presentation. You hear Andy?
Yeah, can y'all hear me?
Yep.
Yeah.
Yeah, I guess I'm supposed to present myself, so I don't know if I have share screen authority or not.
Yeah, you should be able to. I just gave it to you.
Okay. Let's see here. Gotta get this thing going on. And then I will share. You should be able to see this, correct?
Correct.
Yeah, so just real quick, my name is Andy. You've probably seen me running around in the forums. I've been around for a long time. Yeah, and I have been helping the risk team over the past, month or two to refine the old collateral risk model and run some simulations for them. Why didn't that work? Here we go. I won't read this whole disclaimer here, but like this is sort of a holdover from previous presentations that the risk team has done. More or less, it says this isn't financial advice, and you should consult your own advisors to those matters. I'll post this slide probably after this is done. So these set of slides, so you can probably be able to find these on the forum within the day. Yeah, so this kind of an agenda. Basically, we're going to talk about value at risk a little bit. I'll give you a brief nod to the risk team's previous work, and then we'll talk about some improvements that were made to the model as part of this sort of project. And that's kind of the first half, and then the second half we'll kind of go into simulation results. So the first thing that we need to talk about is what is value at risk, VAR, VaR. You may hear me say all those terms here. This is a nice little definition that comes from Wikipedia. Feel free to read it. Basically, it estimates how much a set of investments might lose given a period of time. Here's a picture that kind of illustrates what we're talking about here. You have this bell curve type shape, and this red line here represents the value at risk at 5% on this particular bell curve. So the area under this that's shaded in red here, that's 5% of the total area underneath this curve. And in this example, basically that number is 8.2, but that's not really terribly important. Just kind of to give you a sense of what we're talking about here. So why do you care about this particular metric? Like Primoz said, the nominal risk at Maker is growing. I think today the max theoretical debt ceiling is something like 2.2 billion as of this morning. And so you'll see that there was even in this call previously some comments about certain media figures making statements like, oh, there's this much this much diet risk in the Maker portfolio. Basically, this value at risk metrics helps you make statements like I have quoted here that says, reasonably confident that Maker losses will not exceed X, depending on your confidence in a given year. Potentially you can use that sort of information to help inform your stability buffer decisions, potentially rates decisions, etc. And kind of just overall, it gives you a sort of easy to consume format to talk about how risk is growing in the portfolio. So as you raise the rates, you can point to this metric and say, look, where this number is going up. I'll be real quick here. Pretty much already covered most of this, but here's a link to the Collateral risk model. Here's the source code. Highly recommend these two. Like, take out this previous presentation. It's pretty good. But basically, last year the risk team built a model that runs this Monte Carlo simulation, and it helps you estimate things like expected loss, which we use to inform stability fees, and value at risk, which basically says what's the worst case type losses that this particular vault type will generate. And so that model is what we improved upon. Basically, that model allows you to simulate a hypothetical vault type, but it has some issues. Namely, these issues revolve around the practicality of using it. So there's a bunch of inputs that you need to come up with in order to actually run a simulation. And a lot of these inputs, especially a few ones in particular, are quite complicated to derive. So over the past month, we've written some software that helps us to quickly figure this out for a given collateral type. And the last thing is, you can, with this model, like I said, you can run a simulation for a hypothetical vault type, but you need to account for, that doesn't tell you the value at risk for the whole portfolio. You can't simply sum those up. So the model needs to be improved a bit further, such that we can sort of run these simulations and then determine what the portfolio overall's value at risk is. So slippage is one of those inputs that is really hard to calculate. In layman's terms, like slippage, when you hear the risk team talk about it, this is basically what we stand to lose at auction once somebody defaults on their position. It's basically, like I said here, a function of keeper's profit expectations plus the price impact of liquidating things. I won't go into this too much because I'm already up on 6 minutes, but I highly recommend, I have a link here on the Wi-Fi slippage analysis, which is where I got this graph. I highly recommend somebody just going in there and looking at that thing. You don't have to really take it in, but it's amazing. This sheet is amazing. There's 5 or 6 pages worth of random math that the risk team put together just to, basically make these 4 lines here. I'm dumbfounded every time I look at it. It's great. So I wrote a program that kind of can do the calculation performed in this spreadsheet here, and using that, we can sort of determine the slippage for each individual collateral type. And having those slippage values basically allows us to, look at how vaults are being collateralized, the slippage model, some assumptions about jump risk. We can look up at sigma value from, price movements, etc. And we can simulate every vault type, or almost every vault type, and come up with a value risk number for each individual vault type. But that's not enough to know the portfolio. We need to know how the losses will be correlated with each other. And so basically what we assume for now is that they will be correlated similarly with the price movements. As I noted here, this is probably not a perfect assumption, but it is interesting in terms of risk mitigation, because basically what it says is that the losses will be highly correlated. And here's a little matrix math for you. There'll be some links in the notes on how you can derive this yourself, but basically using that correlation matrix and the vector of your vault type losses, you can do this some little matrix multiplication to determine the value at risk of the entire portfolio, which we'll go over in just a minute. Yeah, so without much ado, with all that said, I'm like, what was done? Here are some figures. First off, I'll talk about slippage. So this is sort of an output of this model's like slippage calculations. I think what the only takeaway I would point out on this slide is that, I know that there's been a lot of calls in the forums to raise East debt ceiling, etc. You can see that, we're now getting into the range where the slippage for ETH is quite high, according to our model. So, this is part of the reason why you see pushback coming from risk on continuing to raise the debt ceiling there. And the sort of big thing here, the value at risk numbers. Few things I want to say about these numbers. They are based off of the past 90 days of trading data. So they are potentially a bit favorable because, there's been a kind of bull run happening during that period of time. And the other thing I wanted to say about them is that there's a few vault types that are not included in these numbers. I have them written here in gray, but any stable coins, the unit swap liquidity tokens, WBTC, and PSM. Reason for that is basically because there's some debate about how to calculate slippage, and thought it best to just leave them out and ignore that they exist. For purposes of this, these numbers are sufficiently high that, I don't feel like it's necessary to talk about them too much, but just know that when you read this. And yeah, so here's some numbers, basically, here's a few arbitrary confidence thresholds I picked. But, kind of basically how you can read this a little bit is basically for every number you see here, VaR P of N, right? 1 minus N is like basically what the model predicts. The probability of single day losses exceeding this number in the right column. So, the model predicts that there's a 20% chance of exceeding 86.4 million in the next 1 year period of time. That's one way you can read this. And the last thing that I kind of wanted to point out, just because it's relevant to current affairs on the forum, is the ETH versus ETH thing here. Obviously, those out of the vaults that were simulated, I talked about all the ones that weren't, all the ones that were simulated. These two are the highest amount of exposure from that set. They account for almost all of the value at risk there. And you'll notice in these forum threads, like various risk team members commenting, I don't feel comfortable raising these things, this sort of thing. One of the things I want to point out here about ETH is that, like, you can see, the way it contributes more proportional to its exposure size. It's probably not that surprising, but every time you increment, you get more bang for your buck in raising your risk exposure. Every time you increase the ETH debt ceiling as compared to raising the ETH debt ceiling. So I just wanted to point that out, and some things to consider when thinking about running polls or signals or whatever. And I think, and this is the last thing I really wanted to point out about these numbers. This is a quote. I've linked the website here where you can find this quote. But basically, what this point is this quote is trying to tell you is that, like, okay, I gave you a bunch of numbers that the model spit out for value at risk at different confidence levels. Those numbers do. There's a term called a VaR breach, which, you know, those basically that the model spits out a confidence level and a number, right? That says we think that there's only a 20% chance that the loss will exceed X, right? It does not state how large that loss will be if it exceeds X. So, for instance, we saw on a slide ago, the model thinks that there's a 1% chance of it exceeding 1 million. If there is, say, for instance, a 0.5% chance that the loss could be 1 billion, it doesn't, that there's nothing wrong with that statement. That there is a 1% chance that it will exceed only 100 million. So be a little bit careful looking at those numbers. They're often misinterpreted, and they do not sort of speak to the nominal size of any potential VaR breach, only the likelihood that they would occur. And, you know, lastly, I'm pretty much ready for questions, but, you know, here's some few potential starters here on what you may potentially do with this information. And, you know, some further extensions we probably can make to the model. But maybe I'll just kind of take a break right here and see if anyone wants to chime in, say anything, ask any questions.
Yeah, with those VaR values, is that a 20% chance, for example, that we would lose, what was it, around 80 million over the course of the year? Or are we thinking a single shock event, or does it just not distinguish between the two?
It would be a single day loss.
Jesus.
So, you know, similar to like last year in, I guess it was March, there was some single day event that like created, it was like 8 million or something worth of bad debt. It's similar to that kind of thing.
Yeah, that's very different than my intuition. So thank you for illuminating that.
And does your model take in account the box of 15 million?
So that is a good question. The model, this is potentially an improvement. It does not take into account the box of, I forget what the number is, but no, it's totally okay with liquidating like basically infinite money in a given day.
Okay, so would you say that the situation can be worse if the box is 15 million and you can liquidate only 15 million per 6 hours? Or better?
I don't.
Yeah, maybe I could jump in. So I think with the box of 15, it really depends how what's the price trajectory, but I would say normally, it protects from really worse events like 0 bits and something like that. So if we adjust it for the box, we would get more optimistic numbers, I think, better numbers. But on the other hand, what we are also not, what the model is also not doing, it's not taking into account people unwinding before getting liquidated, right? So
yeah,
we can't really model for every single thing, user behavior and this kind of stuff. But like on average, we may be under, we're not really taking into account one part, which may be too optimistic, and the other part too pessimistic or something like that. So on average, I would say the slippage curve, which is kind of the real, the most important input, is still kind of realistic, which is where the losses come at the end, right? From the end auctions and the haircuts that happens.
Did you guys say you were using daily value at risk?
So it is a representation of the worst day, but it's so like, okay, so that's a little, so if you go back, right, these numbers are adjusted to predict on a sort of yearly basis. So what would be the worst single day loss? So some nuance there, right? So this does not say every 5 days you should see a loss of 86 million. It's more like every 5 years you should see something.
Yeah, no, I'm trying to understand like so just as an example, our oracles update once per hour. So theoretically, we don't have daily exposure; we have hourly exposure. Is that accounting for this, or?
No, it's basically simplifying it. It's basically what the model is doing. It's calculating losses on each day. So we have thousands of simulations, and there's a 1 year period, right? And then this crash occurs. And then, you have random walk, you have thousands of simulations, and you get this distribution of losses. And the average of those losses is the expected loss. And that's the risk premium. And this is the one that we use when we set rates, right? But when you want to look at the tail losses, right, the worst case events, this is how banks do it as well, right? They calculate value of risk because they want to be hedged against worst case events. This is the number, right? So this is the 1 percentile of the worst losses that we simulated, and thousands of them, and daily losses.
Yeah, so since we're using daily, isn't it safe to say that we're being pretty conservative given that our liquidation exposure is hourly?
Yes and no, right? Because even if it's hourly, in 1 day, you could have many liquidation events. I mean, every hour, and then there's a box, and, not every auction gets cleared. There's a slippage on daily basis for the whole portfolio. So, but I get your point. Like, we could make an alternative simulation, which would be focused just on a shorter time interval, just simulate, how 1 day, the price trajectory during the day, and try to, microestimate that loss and then extrapolate it to a yearly figure. It's also doable, but it's not how the model currently works.
Yeah, and I guess you're looking at it from a little bit different of a lens than I do. Like, I always worry about an OSM attack where you could see a vault go under 100% collateralization. But the rule of thumb I do for that personally is just what was the worst hourly candle on any chart in March, and then overlay that into the vault and assume that that will happen. So yeah, I guess we're kind of taking it from 2 different angles too. But thank you.
Sure. I just want to jump in here. So why I wanted to have this discussion today is really to start thinking about, how can we, hedge maker? What are the tools available? I've discussed about it. So there's surplus buffer. We may need to think about increasing it even further, but we also need to agree that, it takes time to, get to a 10 million figure. So I think it's going to take about 2 months or 3 months to get to 10 million from now, right? This might be already too late. Then the second thing is box parameter. We discussed it, right? It's hard to justify higher number, but it would be really beneficial. Then of course, liquidations 2.0, I think it was in the slide, this would totally improve the slippage function. So the number would be much lower. So that's why I think liquidation 2.0 is kind of a priority from the development perspective right now. And then the other thing, right, about higher liquidation ratio vaults, something I've brought up. I know it's not a totally popular idea because we know it affects growth, but at some point we'll need to choose between business growth and the risk management. And don't forget, like I said, like those figures currently, they're based on the current collateralization ratio distribution, which is very healthy. Like this can change instantly. Like if current vaults think that new Ethereum price, the current Ethereum price is kind of a stable price, they're going to mint more DAI and they will push the ratios down there towards 250. Currently it's pretty high, like just never so high. if we get to some equilibrium state that we observed in the past, then we might have like 50% of the portfolio lowly collateralized, and then those numbers become even worse, right? So yeah, we'll need a discussion here. And maybe in the future, I won't be the most popular guy on forums when people keep insisting raising debt ceilings. So just want to give heads up here.
Yep, I want to thank Andy for doing that presentation. That was great. I'll kind of echo I think what most people are feeling, and that it seems quite a lot higher than people were imagining it was. Obviously, that's something of a wake-up call. So that's good to know. All right. So maybe this is something people need some time to kind of absorb, and maybe we can come back to it in a future meeting or discuss on the forum. Are we going to make that sort of presentation public somewhere as well, Pramesh or Andy?
I will probably post it to the forum sometime after this. I'll probably like export a PDF maybe, or copy it to some read-only thing. Anyways, I'll put it on the forum sometime.
Yeah, that sounds good. It'll be good to have a forum thread to kind of discuss the model and the outputs and things, and potential mitigations. All right, let me cover the thing I forgot earlier then, while I remember. So Pros and David and people pointed out that I forgot to confirm that the MIPs will continue to the executive votes on Monday next week. Yeah, I mean, I was going to confirm like the governance poll passed with flying colours. There's no reason to not continue. So on Monday we will have the MIPs executive vote, which will confirm that those, I believe it's 5 proposals, 6 proposals, which will confirm them and mark them as ratified once it passes. So look out for that on Monday. All right. Okay, we're about 1/2 past. Unless anyone has any final comments they want to make, I guess, on anything, we should maybe think about wrapping up. As usual, I'll leave the call. Well, as usual, I will leave the call open in case people want to discuss in more detail after we stop in the recording. So, if anybody does want to discuss more with Pramesh or Andy, and they're willing, feel free to stick around. All right, let's leave it there in terms of the recording, though. So, thank you everyone for joining us, and we'll see you on next week.